Good morning, everybody. It's Dave. Wednesday, August the 5th. Today, I'm just going to update the portfolio in this video. Um, we wanted to kind of start running actual position holdings. And if you haven't caught it, I've got a couple of videos in there that talk about the big picture and why, even though we're probably pretty close to topping activity, why there isn't necessarily tons of risk at this point. I mean, the top is usually only visible from behind. Usually things begin to break down, and as much potential negativity as there is out there in the world, we just don't know that it's necessarily going to come to fruition because there have been people calling for the tops. And from a data perspective, our modeling has been generally pretty bullish and pretty positive, and really hasn't changed a whole lot, even when we had about an 8 or 9% decline. So, I mean, I do expect there is going to be some things that tend to occur in the coming months, but and they may lower our weights at this point. But at this particular point, I'm working off of the timing. As I said before, I think that given where we are within our cycle, that the timing component tends to make a little bit more sense, and tends to have a bit more of a weighting. Our flex model has the weighting component that's overweight the timing side. And if you sort of go back to our D2 process, I'll just flick over to a different screen here. But, what you can see is this is the SSO, which is the same as the S&P 500. But what you can see clearly is that the purple line is above, for the most part, above the cyan. It's above the yellow. It's above the green. And so we're in this environment where there's a lot of advantage to being sort of short-term oriented and taking advantage of the market. It seems to be that long side, and short side trades continue to work. For the purposes of this blog, we don't do a whole lot on the short side other than our 2D modeling for the E-mini futures, but it's a different kind of concept. So again, I think that if you're looking at this from that perspective, you'll see that there's some value added by moving in and moving out of stuff. So what we've done here, as you can see, is that this is our weightings as of last night. This is, there hasn't been a whole lot of change. I think that the base model probably dropped, maybe about 10% as the price of the market has sort of tried to work itself higher. The low activity model has gone from sort of a low 90 to a low 80. So nothing really to trigger anything out of that particular point. Again, the idea is that especially if you're looking at this and using it as a tool to gauge with what it is that you're doing, you can kind of take a look at this. For in terms of when we want to crystallize, a weighting. So let's say we start with 100% and we go to let's say we go to 50%. I'll discuss what trigger I'm using to sort of give us that way. But there's a series of different things in terms of money management that you might want to look at to sort of crystallize your weights. Crystallize when you're going to make your changes in your underlying portfolio. This is a floating portfolio. We don't suggest that, or I don't suggest that you constantly update every week. But the idea is that most people who are reading the blog understand that this is a product that you're working with your E-Trade or your TD Ameritrade or somebody where you can transact on these ETFs, usually only on one side. The Canadian market, we deal with Questrade. I think they charge you $5 whenever you go to sell your portfolio. So it's pretty reasonable, especially based on the size of your portfolio. Again, if you don't have a bigger portfolio, you're probably better off to be something that's a little bit more lower activity focused, so that you don't have to kind of be working in and out of transactions necessarily all the time. Although there are times where it is advantageous to kind of do that. So the big shifts probably have come in the tactical focus and the flex model. They've gone from fairly significant weights to some fairly significant underweights. So in the case of the tactical focus, it's gone from about, I think, a peak weight of about 153 2-3 weeks ago to about 100% right now. So the interesting thing about the tactical focus portfolios, you'll notice is that from a pure weighting perspective, you're still 100% at this point in the market. And if the market was to kind of slough off over the next few weeks, you would probably move back up to 160. If the market was to start moving itself close to the old highs, you're probably looking at moving your portfolio somewhere around like 75 to 80% weight. So you're still going to have a fairly sizable chunk of money that's devoted to the equities. And the idea here is that sort of when the market becomes trending, you're going to kind of make your money. Granted, the fact that we've had 7 years of basically straight up performance, the likelihood is that it's going to be mitigated to some extent on the upside, but you never know. We might have that 20% flare in the market just because people going crazy with the interest rate staying so low. You have these tops of markets that go nuts. Flex model. Generally, the flex model is probably the model that I like the most. The flex model is really designed for people that want to kind of take advantage of some changes in the market. So from that perspective, I haven't really legged into the trades a whole lot at this particular point, being that we're sitting mid-market. So you can kind of see what I'll do is I'll maintain this on the website so people can see. So right now we're in the different portfolios, we're anywhere from 32 to 75% cash, and plan to kind of stay that way over the next bit of time. And once we get some sort of either sell trigger where we might be able to reduce that cash, or some sort of buy trigger where we'll actually look to kind of take it pretty close to what the weights that we see in our portfolio, then we'll be able to track this stuff. So again, there's our portfolio starting out August 1st, 2015, and it's over the next couple of years should be pretty interesting times in the equity markets. Hopefully we don't have to get to the point where our trend ranking is actually to a sell, but and if we do, we'll probably look to add some short trade side stuff from that perspective. But anyway, there it is.